In just a second, we'll speak to Daniel Geltrude, CPA, business analyst. Geltrude.com is where you can find him, Geltrude, regarding the new tax bill. Mr. Geltrude is a CPA, again, a business analyst. You see it pass the House, Mike. It's going to be interesting. You don't own property, so that's a good time not to own property, right?
I just recently became someone who doesn't own property.
Yeah, that's
fantastic.
Very good. With good timing on that, my friend. Let's go out to Mr. Geltrude, Daniel Geltrude, again. Welcome to the program, sir.
Thank you.
So this thing has passed the House now, and presumably it's going to be passed through the Senate. I was just my concern is what it means for states like California and New York, where we lose the state tax deduction, which in this state is a gigantic sum for most people. Yeah. And we also lose property tax deduction, again, in a state where property is ridiculously expensive. Is this going to have an effect on, I wonder, is it going to crush these states' economies? Is it going to crash their real estate markets? Is it going to require these state governments to get their act in order and come in line from a budgetary standpoint? Or do we just not know, or none of the above? What do you think, Mr. Geltrude?
Well, let's take it one piece at a time. So the fact that people in California, high-tax state, are going to be losing that deduction for both real estate taxes and state income taxes above $10,000, that's going to be significant for a lot of people. So on an individual level, we're going to have people that are going to end up paying more to the federal government. That's piece one. Piece two, there's no doubt that it has to have some type of economic impact on the real estate market in California. How does it not? Because when people look at real estate and they're going to purchase property, what are they looking at? How much is this going to cost me per month?
Yeah.
So losing the state deductions, and on top of it, having a limitation from $1 million down to $750,000 on mortgage interest payments, now you say, I have less available to make payments.
Right.
It has to bring the real estate value down.
Plus, we are entering an environment where rates may climb, which is going to add to your mortgage expense, and it seems like a perfect storm of trouble for real estate.
It really does, and I think it's a perfect storm of trouble for states like California, New York, and some of the others. I mean, this is really where they don't want to be. However, there's another argument here, and that is, how could you blame President Trump, per se, when you've had state spending that's been out of control, in many places around the country?
Well, right. That's one of the questions.
Definitely here in California.
Yeah. Is it going to require the state to get its act together? And this state's been running out of control for so long. I don't understand how that's even possible unless they all end up with sexual harassment suits on them and have to step down, and we get a whole new group in. I don't know. But
we'll see in the round of 2018 state elections, right? As those are coming up, are people going to rebel against, the incumbents and say, you guys are to blame for what's happened here? We're getting a double hit now on our taxes.
Yeah, absolutely. Although, again, in California, it's hard to know. And the idea that this is a tax break for the rich, how is that possibly being perpetrated? I think the whole thing is designed for that 50 to 85% mid-range taxpayer, is it not? And the corporations, too. Yes,
the corporations clearly are the big winners. Yeah. So let's put them aside. But when we're talking about individuals, I know the thing that people have been talking about, the propaganda, if you will, is related to the rich are really going to make out on this. I don't see it. Even with the fact of they go to the death tax and say, well, if you're married, let's say, it was at $11 million as far as an exemption. Yeah. Now it's going to be $22. When you factor that out, that's about, let's even call it $5 million in tax. Or Donald Trump's kids are getting this big break. $5 million on a multi-billion-dollar estate? I don't think so.
Well, but the mostly rich do get a break. Somebody with that's $11 million estate. That's still a big deal. It's not the crazy rich.
Yes, it is. But of course, I'm just saying where the media targets is they target the president, right?
Right.
But to him, that $5 million is immaterial.
Right. Yeah, right. At least for his kids, in the big picture. Well, are you optimistic that this plan is going to have its desired effect on our economy, or is it going to sort of yet to be seen? Because as we're discussing here, there are many sort of wrinkles to how it may affect us.
If I had to predict, if you say, Dan, you got to take a position in this, you can't say we'll see, and punt it here. So I would say it's going to work. I think the economy is going to continue to rev up. And the reason I say that is if you look at how the stock market has been performing pre-tax reform, and clearly Wall Street has been waiting for this.
Yeah.
So now that they're going to have it and the tax cuts are predominantly geared towards corporation, I think the stock market is continue to rise, and that is going to help everybody downstream here.
I got to say, though, I agree with that on our 401ks and our retirement plans and whatnot, and thankfully that will help all that. But, boy, the real estate effects, that's unsettling in a state like this. The real estate and the question of will the state get its financial budgetary act in order. But both are pretty big question marks in this state, at least this part of this state, like San Francisco, L.A., San Diego.
Here's why California is not going to put their house in financial order. They'll continue to borrow like many of the other states and as well as the federal government. And quite frankly, no one pays attention to the debt. It's the here and now. Where's my pocketbook? What's happening? So I just don't see the state being so concerned to say we have to do something from a deficit standpoint. They may say we have to do something to keep everybody calm right now so we can stay in office, but in terms of the long-term picture and keep running up the debt, I don't think they're going to pay attention to that.
Yeah, I agree with you on that, but it's the debt side is not so much what I think people are going to be focusing on so much as the specific tax bill that they get, which is, and again, a non-deductible tax bill. So it feels like double jeopardy. It feels like you're paying twice. But be that as it may, we will see how this plays out. Mr. Geltrude, thank you. It's Geltrude.com.
Thank you.
Daniel Geltrude is a CPA business analyst, accounting professor, and hopefully I'll talk to you again soon as this thing starts to shake out.
Thank you.
All right, thank you
guys.
so much. 800-222-5222. It's Midday Live. Dr. Joe Mike Cather. If you want to talk.